Greetings, this is Dr. Jeffrey Scott, and this is my Markets in Minutes for August 28, 2023. Market stage, a broad-based rebound. Here's my new email address, jeffrey.scott@topdowntrader.com. I'll plan on posting these on YouTube every couple of days, and this will be my review of the market of the current day. I want to demonstrate some of the tools that I use to help me make my decisions in the market and help drive my top-down analysis. As always, any of these videos should be considered education and not investment advice. I'm a doctor, not a broker. I have none of the licenses that would be required for me to tell you what to do with your money. I'm independent of any software vendor or trading company, and I've paid for the tools that I use. And trading involves risk, and you are solely responsible for any investment decisions you make. I do have a live webinar that I'm really looking forward to doing on Wednesday night, August 30th, where I'll demonstrate my approach to top-down investing, identify potential trades, and review my favorite option strategies. I'm going to introduce my tool sets. I trade the exact same way no matter what platform I'm using. Whether I'm using wealth charts with the CAT scan indicators, a great platform, TradeStation, which many of you may use for your trading with my market MRI and similar indicators, or for those that might use Ninja or something else, my trading view indicators. And as will be shown on the Wednesday video, launch price on TradeStation and TradingView tools will be offered. And to register, and I'll put this in the YouTube remark session at tinyurl.com/topdowndoc. That's me. If you like these videos, I do something on a daily basis at stocksanddocs.com, and that is will be predominantly a wealth charts evaluation. It's typically done before the market opens, and it's usually 6 or 8 minutes worth of a presentation. So again, thanks for being here, and let's take a look at the market. So I'm going to start here. Again, I'm using TradeStation for this session. I don't trade this account very much, so you won't see much change in the activity at the bottom, but I like to use this for demonstration purposes. As you can see across the top, I have daily charts of the spiders, the Qs, and the diamonds. And what you could see across each of these is a trend line resistance in red. Those are auto-generated. And in yellow, you have a 50-day moving average. Now, what you can see is that each of these are running up towards resistance. The spider kind of got to the point above this trend line, so I think it's going to be interesting to see if the spider breaks out above here. Unfortunately for the spider, as you can see when I blow this up here, it has still got to deal with the 50-day moving average, which is right above it. So that one is interesting because a breakout here from this triangle, you would think that the market's going to start moving out to new highs. I think there's high risk of failure. You've got resistance under or support underneath. So we're going to break one way, but it may not be this time, this swing. If you look at the Qs, again, right below the 50-day moving average, also has to get through trend line support, or resistance rather, not in as good a shape as the spiders. And then the diamonds traded up to and failed at their 50. So all three are at resistance. When I look at the Russell, it's sort of midway between support and resistance, really going sideways and consolidating down here. The Russell was up, you can see the IWM was up 0.88%, 0.64 on the diamonds, 0.82 on the Qs, and 0.63 on the spiders. No surprise that with the market selling off, UVXY dropped here and broke through support. Now, the question is going to be when you look at the spider, is it going to do the opposite of this and break through resistance? Or is it going to trade back down and then have the same question, will break through that first line of support? One of the things that was positive in the market for those that are bullish was the dollar weakened a bit on the session. When I jump and I look at commodities with the dollar weakened, you can see both gold and silver moved up. And this is make sure it's a daily chart. It is. Silver is above the 50, gold is not. They're both going to come into an area of resistance. If I look at oil, it looks like the major indices with resistance right at where price is. So right now, we have this candle right here that closed pretty much on that resistance line, down just a few pennies. It'll be interesting to see what oil does. And natural gas continues to be weak and was down another 0.15% on Monday. 10-year and 30-year both were down. Well, the 10-year was down on the session. It looks like it should have been down a teeny bit, and the 30-year looks like it probably finished pretty much flat on the session. Not sure why this isn't giving me the signal because it does look like it actually traded down a tad. The fact that they're off their highs is the important thing. I'd like to see both the dollar and the 10-year break. Now, the likelihood of this 10-year falling hard, look at all this support lines underneath. But we'll see. I think the market goes the way of the 10-year and the dollar. Now, the next step is to figure out what's working in the market. So, TradeStation has never been my go-to for figuring out sector or industry group analysis. I think I could do much better in wealth charts, HGSI, TC2000, etc. However, if once I was able to create the right ranking indicators, the force, 2-day, 5 or 13, my modified force, which takes away the benefits of high volume stocks, or just looking at a relative strength ranking or rate of change, there are various ways that I can rank. What I have here under S&P sectors, if we look at it just 1-day rank, you can get a sense that communications, real estate, and materials were up, as was industrials, energy. It was a strong day in the session. Let me make sure I got it ranked the right way. Yep, and you can get a sense here of what was moving the most on a 1-day ranking. It's going to be very similar when I look at Force Index 2-day and the modified 2, but there'll be some small variation. But what I really want to look at is down here, and where is their strength in the market? There's strength in the market in China. There's strength in the market in silver, in triple Qs, social, okay, and even ARCX. So this gives me a sense of what's working in the market. And now I can go into my market MRI tool. Okay, so now I'm going to go into the market MRI tool, and I've already ran it against a large list of stocks to see if the best things come to the top. But based upon what I just saw over on my radar screen, I want to look at China. So I have a ETF list for KWEB put together, which is a Chinese ETF. So let's load this into the market MRI. And now let's very quickly run it. And what it's going to do is it's going to look for each of the parameters that I like on these stocks. And then I'm going to put them up here. And I'm going to start going down the top and see if any of these look interesting. So I like pullbacks and uptrends. So I might go in here. I might open my pullbacks and uptrend scan, hit OK, and see. And I've got 2 that hit. So one of them was YY, and that's the daily. I don't like all this resistance bars above, so I'd probably pass on that. And then XPEV, which I do like. And XPEV is a electric vehicle manufacturer. It caused a big run when they had a big investment from another company in their EVs. But you could see on Monday it had a nice move up. It had a new CPR signal. It had momentum and relative strength in OBV. So if I want to look in the Chinese market, I might take a look at XPEV. Now, what else could I look at? If I want to broaden out and take the longer list of stocks, which is this list here, let's filter it for the same thing. Open, pull back an uptrend, hit OK. You're going to see this list get smaller, and let's take a look at what comes to the top. HT, I look at it quickly. A REIT doesn't really, there's the price bar. I don't know what to do with a stock that moves that much on one day, so let's move. ING is one that I like. This is in the insurance complex. Why? Uptrend, pullback on the weekly, uptrend, pullback, and then look at all this support underneath. Took out the 17 with a volume breakout momentum. I like relative strength in OBV, so I like ING. I also like ZTS, which is a veterinarian medicine play. Now, it does have resistance above, So that's something to keep in mind. But it's another one that pulled back into support and had a breakout. And how about Elanco, another veterinarian? Again, got to watch this resistance above. Certainly a break above that would be exciting. ET is one we talked about over the weekend when the MLP is breaking out. This one also pays a great dividend. And this is one I might like the most because, well, I own it. But besides that, because it had a big breakout off of support, it doesn't have the 200-day moving over it. Earnings are not until October 31st. So, um, this is how I look at the market. And if you notice, that was 10 minutes to go from market, industry sectors, to stocks, to pick. Hope you like that. And again, if you do, and you want to see more of how I use my tools, and like I said, I can do the exact same thing if you use wealth charts, if you use TradingView, TradeStation. I have a number of things. And again, I'll be doing a live webinar on August 30th at 8 p.m. where I demonstrate in much more detail. This will probably go 90 minutes to 2 hours. And I'll take your questions, ask me anything, and give you some special launch prices. See you on Wednesday.